Today, I want to talk about how delisted and deleted stocks like APE, MMTLP's dividend, Nextbridge Hydrocarbons and others are still being traded and lent out, and how APE is still being used to cover AMC's FTDs from beyond the grave. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, I want to cast your mind back to a few months ago when we spoke about AMC's tokenized stock FTX and its trading and price action on crypto.com. The AMC tokenized stock issued through FTX should have ceased trading on November 18th when FTX collapsed at $4 per share. But somewhere between then and a few months ago, the price of this AMC tokenized stock changed from $4 per share down to $0.025. That means that somewhere post the FTX collapse, these tokenized stocks were shorted further down from $4 to $0.025 per share. And it seems it's not just these tokenized stocks on FTX that are still illegally being traded. Svika tweeted saying, confirmed, this is from today. If you search for APE stock, you get the price action for today just for a second and then it vanishes. If you search for the APE stock on Google, it says that on the Mexican Stock Exchange, it increased by 16% today alone. Now you can see down here this date that says the 24th of August at GMT -6, which is the date when APE should have stopped trading. We should see plus 0.000% for today, but yet the APE stock illegally moved upwards 16% today alone on the Mexican Stock Exchange. And it's not just AMC's tokenized shares and APE that are still being traded, because Nextbridge Hydrocarbons, a stock that should be part of a private company, is still being lent out. This account posted saying Nextbridge Hydrocarbons is still being lent out. Please spread the photo. This user has 18.7 units or 18.7 shares that are being lent out for £14.88. £14.88 is almost $19, which is the current lending fee for NBH or Nextbridge Hydrocarbons in England. Nextbridge Hydrocarbons isn't trading as it's a private company, so this is illegal. And it seems Erin has figured out how these shares are still being illegally traded and illegally lent out. She tweeted asking if you've never heard of EquiLend, and she said that's exactly how Wall Street wants it. She said every time your mutual fund or hedge fund borrows shares to short, they're using your stock. Now this article is titled Inside the $499 million lawsuit settlement, exposing the opaque world of securities lending. It says some of America's billion-dollar pension funds have agreed to a proposed settlement in a lawsuit against Wall Street banks, in a long-running case that cracked open the hidden world of securities lending. In securities lending, pension funds and retirement plans lend out their portfolio shares to hedge funds and other investors, using Wall Street brokers that charge a fee. But the business was so tightly controlled that it effectively functioned as a cartel, according to the pension fund's class action lawsuit. Many of these major Wall Street banks were part of an antitrust lawsuit alleging that Morgan Stanley, Goldman Sachs, UBS, JP Morgan Chase and Credit Suisse and Bank of America ran a price fixing scheme using their own joint venture called EquiLend. In effect, the banks hurt pension funds by keeping fees paid artificially low, and that prevented asset owners from earning more revenues when they lent out stock. Basically manipulating those borrowing fee rates to make a stock look like it has a cheaper borrowing fee than it actually does. As part of the settlement agreement, EquiLend agreed to undertake reforms over the next 5 years. So basically it's going to continue operating illegally until the end of this 5-year period. So it's likely these major banks are still keeping stocks like APE, AMC's tokenized stock and Nextbridge Hydrocarbons trading so they can continue lending out those shares to short sellers. Either to allow those short sellers to cover their AMC FTDs using APE, or to collect more and more money, or to use those shares to short the stock down further. Again, just even more corruption that's been exposed, and the banks even admit to that corruption, paying this $499 million fine. But yet still nothing is done about the corruption, as these banks are allowed to continue doing what they do best, committing illegal crimes, at least for another 5 years. After that 5-year period, some kind of reform is expected to happen, but what exactly that reform will be, I'm sure nobody will know at the end of that 5-year period. It'll all be forgotten, the banks won't change what they're doing, and they'll continue committing illegal crimes. Now it seems the shorts are also still trying to convince you to sell your shares by showing you fake Webull data. Webull is currently saying that shareholders hold AMC with an average cost price of $14 per share post-split or $1.40 per share pre-split, saying that 70.5% of all AMC shareholders are apparently in profit, and saying that basically nobody holds any shares above $14 or $15 per share, or above $1.40, $1.50 per share pre-split. Now Citadel added saying, I don't believe that over 70% of AMC shares are profitable right now. He said this is probably fake data because it doesn't make sense how fast the numbers change day to day on Webull. I think this is another tactic to try and convince you or scare you into selling. Webull wants you to look at this chart and say, wow, nobody is holding AMC shares at prices above where they are now. I should probably really sell. Now, obviously, that's what Webull wants you to think and what Webull wants you to do. But as far as I'm aware, no AMC investors or no apes, no retail investors are selling. And that's something confirmed by AMC's 10K filing, where 3.8 million retail investors still remain holding AMC shares. This is just another attempt by those shorts to try and scare you into selling, saying that everybody above the current price has already sold their AMC shares, and you probably should as well. But obviously, if you haven't figured out by now, the best thing to do is not to listen to the short sellers. They're obviously trying to convince you to sell for their own benefit. But it seems B. Riley is expecting something major to happen to AMC soon enough. Practical Stocks tweet is saying, breaking news. B. Riley raises its AMC price target to $45 per share. It says B. Riley raises its AMC Entertainment Holdings price target to $45 from $4.50. It says the Taylor Swift concert film highlights a new growth opportunity. Now, I don't know if this is a pre-split or a post-split price prediction, but it means B. Riley is expecting AMC at least to triple from its current position, if not increase by 30 times. Whether this is B. Riley actually expecting a massive move upwards, or trying to bait you into buying call options, or trying to convince you into selling early, I don't know. It's likely AMC will be having a move upwards over the next few days or the next week or two, but I wouldn't get carried away with call options just yet. We know, especially over the last 2.5 years, the hedge funds and the shorts try and bait us into buying call options at any possible opportunity, because that way they try and drain our funds on these call options and make them expire worthless. I personally think buying call options is not a good idea until we start seeing the AMC squeeze, because call options are a short-term play. Short-term plays like call options aren't a problem when you are 100% confident the price is going to move upwards in a very short time period. But if you can't guarantee the squeeze is already happening, it may just be another way for the shorts to try and steal your premiums. And that's why, as confirmed by AMC's 10K, many retail investors, or at least 3.8 million retail investors, have just been buying and holding. Now, Top G also tweeted saying he wouldn't be surprised one bit if AMC randomly shoots to $1,000 per share any day now. This is something I've been thinking as well. We know the shorts have been getting more and more and more over-leveraged as time's gone by, especially over the last few weeks. They've thrown everything they have, including the kitchen sink, at AMC, continuing to illegally trade and lend out ape shares. We know the shorts are at the end of their tether. We know that Citadel has used up the majority of their margin with Bank of America, and it won't be long until the shorts do end up being liquidated. When that day actually happens, whether it's tomorrow, the day after, next week, the week after that, or the month after that, I don't know, but it could happen any day now. And when shorts do get liquidated, they'll be liquidated in a massive, massive way, causing a massive AMC price run. And when we see that massive run, the squeeze at that point is pretty much guaranteed. If AMC did run to $1,000 per share post-split any day now, that would absolutely cause the squeeze, as it would be setting a new all-time high for AMC. $1,000 per share with the current number of shares lent out and the current synthetics in existence would be way too much of a loss for the shorts to handle. They would not be able to meet margin calls, and with that massive amount of risk, margin calls wouldn't be waived either. A few $1 billion here and there in margin calls can be waived, but hundreds of billions, if not trillions of dollars in margin calls cannot. Hundreds of billions, if not trillions, in margin calls will end with a stock market collapse. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.